Hello, everyone, to the second episode of our journey to financial freedom. And yeah, let's start with the personal update. So, there's a one change in this picture, and this is this. Uh, I don't know if I drew it any good, but this is like a work dossier or something like that. I know it looks like a shopping cart, but I found a job and currently I'm employed. I mean, I'm going to sign an agreement in a couple of days and have an induction um, early April, I think. And yeah, so I'm very grateful for that. This is a base of of financial freedom, being employed and actually earning money. So yeah, and I wouldn't recommend any of you losing your job right now because it was horrible. I found it pretty quick, I think, but I've made a huge effort towards it. I've created a lot of stuff, a portfolio, a new resume. I've sent like 300 applications and I had like 8 interviews, so the percentage is not really great also, and most of these interviews of course rejected me, but I found one company that's actually really happy to employ me. And yeah, and this is the first employment. We're gonna be looking for the second one, of course, and it may change sooner or later, but yeah, thank you, I'm very grateful. Let's move on. Well, as a thumbnail said, the market is dropping, I think, quite hard, and I actually lost some money. I lost more than 10% of my portfolio value, uh, mostly because I still have some percent of it in highly leveraged ETFs like TQQQ, and I'm moving towards having a pure stock portfolio, and maybe part of it should be an ETFs, leverage ETFs. I think TQQQ works quite nice. Of course, besides the things that it's um, really bad at, I think it's losing quite substantially than earning regarding its 3 times leverage. But we're gonna talk about that maybe another time. Let's find out stock to have an analysis, and maybe I will show you a little bit more of what I've also learned through this period of being unemployed, because I was quite busy and I learned new things. So yeah, the next stock, Nvidia, great. Everybody knows Nvidia, the chip maker, the graphics card maker, or whatever. Let's see how it performed since 2012, which means basically like 13 years, and it returned a whooping sum of nearly 47,000% and plus 60% a year. Since 24 years, it returned 150,000%, which is crazy. This is insane. And 37, nearly 37% every year for more than 20 years, 24 years. Revenue growth is steady growing in this company. This company always finds its way to uh, use its product in new markets and environments. Nvidia, of course, was known for creating graphic cards for video games, for PCs and laptops. Then those were used in cryptocurrency mining and such stuff. So the customer is always buying some Nvidia products, and now we're having an AI meltdown because the market is currently dropping. But I think it can change. We've seen before this drop a huge upside move for basically all the chip makers. So yeah, net growth, net income is also steady growing. Maybe not as steady as revenue, but net income is net income. And something new, I've changed the debt to fundamentals, and I'm gonna show you what does it mean. So I've made a system, basically 1, 0, -1, meaning that um, the revenue and the earnings of the company is steady growing. The income forecasts, the 2 years forward-looking income forecasts are also steady growing, which means 1 point, and the debt is healthy, which means the company is currently not struggling with any kind of debt, high leverage business, having maybe some more percentage risk for default. And let me show you what I mean. So this is Scrub, and this is master chart on Scrub. And I've created chart layouts regarding, this is in my language, so sorry, regarding those fundamental analysis. So let's check NVIDIA. And this is basically the first one, the operating margin and revenue growth as of now. And you can change it to line, to percentage. And this is actually huge. This company, since like 5 years, is increasing its revenue every year, every quarter. I mean, this is of course um, a scale, like linear or logarithmic scale, so it's smoothen out. But as you can see, it's growing quite substantially, 2000% to 1,500. Cash from operations, net income and revenue. This is what I'm looking for, basically, analyzing the stocks. And below you can see operating margins, trailing 12 months, return on assets quarterly, and return on invested capital also trailing 12 months. As you can see, since 2022, 2023, the company is performing quite great also regarding those tools. Of course, if you've changed the percentage, that doesn't look that great as a on linear scale, but as you can see, the percentage also are growing. Okay, let's move on to how's it called again? Forecasts. Okay, so forecast. Check the price. So those 5 elements, the earnings per share long term, revenue on average, estimate annual growth in next 2 years, CFO in next 2 years, and estimated growth of EPS in next 2 years. And as you can see, it's not as smooth because this is from based on quarterly or yearly reports, but still, as you can see, NVIDIA is performing quite well. Estimated earnings per share for 5 years term is 27% of increase, and all the others are also increasing. So that's basically it. It's pretty good company, I believe. So yeah, let's go back to our template. And the seasonals. I think I showed you what I mean by seasonals. This is not as good as the previous company, and since 2011 we have 10 years in a profit and 4 years in a loss. Let me just show you seasonals. Please disregard this mess right now that's happening here. Maybe I will talk about that a little bit in the minute. Let's check seasonals. So yeah, this is basically it. We have years that the stock lost money and the years that the stock earned money and performed quite well. As you can see, 2023, a year after the Ukraine conflict stock market crash is uh, the best year to have Nvidia to have bought it. Other years are also quite great, I think. As you can see, a lot of years Nvidia returned like 100, 180, 120%, and it lost basically like minus 12, minus 10, 33, and of course 2022 it was the huge market crash of minus 51%. But still, I mean, 10 to 4 is something I would accept. So yeah, the grade is A, if not A plus even. Let me use my graphic design skills to alter the design a little bit. A plus. And yeah, that's basically it. We lost money on stock exchange. We found a job, huge, and maybe I don't know how long this episode will be. Let's maybe go to the chart. Okay, so what is this mess, this chaos here? Those are the balance zones, basically meaning the these rectangles without a fill are as zones of profit, and the main balance zone is created here, and I doubled also it that I've created a balance zone here because it's a huge consolidation, and it's created in a way regarding when the price consolidated, stopped when the price tested this level, and then I created the profit zones, 2 times profit zones, 4 times profit zones, and 8 times profit zones, this red big things, and please disregard maybe this balance zone that I've created on top of this huge consolidation. I think what's more important than that is I also mark the previous accumulation zone, which of course corresponds to the balance zone, because this was the place that the price stopped and moved forward, and is a great support for the price. So I think here the volume really accumulated, the smart money or wholesalers accumulated the stock, the product, and they of course are distributing it within the trends up, and the huge distribution that we can see is also here. Look how much time the price is spending here, and how much effort is put to support the price and also to resist it. This means that sellers are competing to sell the product on this price level, and every time we touch it or puncture it, we're coming back to the balance zone, which is basically a huge distribution. So this distribution can of course end in 2 ways: liquidation, and meaning the longs that bought here are trapped, and they will fuel the liquidation and maybe support the price when they will all lose money. And of course we can also accumulate again here at the lows and move even further up, especially if Nvidia shows a great great performance in its earnings and stuff like that, because that's how it works. Regarding pricing, if this is a good opportunity to buy right now, I also use the scrub, and I use 2 things, which is a target upside for Nvidia. Let's find Nvidia, pick. So what's an upside? Upside is the difference between price target and the price itself. And as you can see, the price upside during the 2022 and 2025 market crashes was around 78, which means that the difference between the price and the price target was 70%, 80%. As of now, we're at 50%, which is also not too shabby, because as you can see on other correctional moves, this price was also the upside was also like 50 or 40%. So yeah, you buy at high upside and you sell, or you don't buy, you don't accumulate at low upside, meaning that we are near the all-time highs. There's also all-times high percentage off indicator. So as of now, we are only 13% from all-time highs. As you can see, it was vastly more, but still, you don't know if you're gonna get that price. And maybe if another global conflict or another COVID happens, let's maybe check COVID. Where is COVID? It was 2020, right? Right here, I think. I'm not sure. It's been 6 years, to be honest. A lot have changed, and we only did like 37%. Yeah. Tariffs, liquidation, 36%. That would be perfect, actually. I would buy Nvidia if I could get that price. I also use yeah, the price to earnings ratio, 2-year forward, price to sales ratio, and price to CFO ratio that you can see right here. Basically, let's turn off the price to CFO maybe. Let's see at the price earnings only. As you can see, Nvidia was a buy at 21 or 20 and a half or 20 or 19, and those were great prices to buy regarding price to earnings. As of now, we're at 25, which is not that high. Nvidia could be bought for a lot of higher price, like 30 or 28, but still, it would be great to accumulate Nvidia for 21 or 20 or something similar like that. But I don't know if it's gonna happen. Nobody knows. And yeah, that's basically it. Regarding the, I forgot to showcase the how I calculate the total returns of returns since 2012 and 2002. It's basically this side, total returns, and you can see the chart is plotted how the price of Nvidia behaved regarding, you can basically put in anything you want here, Microsoft or whatever. I do it regarding SPI and Nasdaq QQQ ETFs, and as you can see, it would be substantially better to hold Nvidia than to hold Nasdaq ETF. Why? Well, because Nasdaq ETF is 100 of different companies, and quite a lot of those companies are not really performing that well regarding to QQQ or regarding to Microsoft, Apple, Nvidia, Broadcom. So basically, I'm trying to find best companies that perform way better than QQQ. So yeah, that's it basically. Thank you for watching. I hope it helps you. Stay tuned to another updates. I hope it will be about earning money, not losing on a stock exchange. And yeah, thank you. Bye.